To keep yourself updated, subscribe to Indigolearn and click the bell icon.
Friends, now let us look at the next problem. This is from investment accounts, which is a chapter in our curriculum. A private limited follows calendar year for accounting purposes. So, Jan to December. The company purchased 5,000 numbers, 13.5% convertible debentures of face value 100 each of P Limited on 1st May 2018 at 105 on cum interest basis. So, this company purchased 5,000 debentures, 13.5% debentures, face value 100. These debentures are purchased on 1st of May and these are purchased at 105 per debenture, which is on a cum interest basis. Interest on these instruments is payable on 31st March and 30th September respectively. So, on 31st March interest would have been paid, and then for the month of April interest would have been accrued but not due. So, that amount would have been charged on at the time of this purchase, 1 month interest. On August 1st, 2018, the company again purchased 2,500 of such debentures. August 1st means how many months? April, May, June, July, 4 more months, okay? 4 months of interest accrued, purchased 2,500 of such debentures at 102.5 each on cum interest basis. On 1st October 2018, the company sold 2,000 debentures at 103. When was interest paid? On 30th of September. So, interest full amount already collected, rather from our side interest collected. So, on 1st of October we sold off 2,000 debentures. Out of how many debentures we have? 5,000 plus we purchased 2,500. Out of 7,500 we sold off 2,000 debentures, okay, at 103. Now, when I say 103, is it cum interest or ex interest? Well, interest was collected till yesterday. Today if I am selling off, there is no interest that I am considering in that. So, even if you say cum interest, there is no interest in it, okay. Alright. Now, on 31st of December, the company received 10,000 equity shares of rupees 10 each in P Limited on conversion of 20% of its holdings. Okay, so because these are convertible debentures, 20% of these debentures have been converted into equity shares. Alright, then interest for 3 months on converted debentures was also received on 31st December 2018. Market value of the debentures and equity shares as at the close of the year were 106 and rupees 9 respectively. Debentures 106, shares 9. Prepare debenture investment account and equity shares investment account in the books of a private limited for the year 2018 on average cost basis. Okay. So, friends, now what we will start doing is we will prepare an investment account. For that we will do different workings. Please have a detailed reading of this question once again if you want. Now, we will start solving this problem. Now, let us do working notes to solve this problem. So, first of all, let us talk about the transaction which occurred on 1st May 2018. On 1st May, purchase of debentures happened. Let us do the workings for that. What is the number of debentures purchased? So, this is calculation for 1st May 2018, we purchased 5,000 debentures. 5,000 debentures have been purchased at what value? They have been purchased at 105 cum interest, okay. 105 cum interest means in this, what is the principal portion? What is the interest portion? Interest portion will be 100 into 13.5% into 1 by 12. That will be the interest portion, because 1 month interest is what we would have paid. So, let us calculate how much will that come to. 100 into 13.5% is 13.5. 13.5 divided by 12, that will be 1.125. 1.125 into 5,000 will be what? 5625. That is the interest what we paid. Principal will be 5,000 into 105 minus 5625. So 5,19,375 is the principal portion. Okay. So by doing this, we can start, preparing when we start preparing the investment account, this will go into cost, or we call it amount column. This will go into interest column. Friends, clear? This is the first working, which is for the investment acquisition on 1st of May. Right. Now move to the next one. Interest on these instruments is payable on 31st of March and 30th of September. Okay. Then on 1st of August, there is one more acquisition. Let us make working note 2 for that. 1st of August 2018. Company purchased 2500 debentures. 2500 debentures at 102.5 per debenture. Okay. Now, what is the interest? 100 into 13.5 into, we already spoke about it, April, May, June, July, 4 months, 4 by 12 into 2500 debentures. That is the total interest. So let's calculate. So the 100 into 13.5 into 4 by 12 into 2500. 11,250 is the interest portion. Now come to the principal. 2,500 into 102.5 minus, means 2,56,250 minus 11,250, which is 2,45,000. That is the principal column. Alright, so now we have clarity on what the principal column is. So this is 2,45,000, which is amount. As I said, it's basically cost, or you can call it amount. This is going into interest column in the ledger. Right. Let's move to the next point in the problem. Now let us make the next working note. As per the question, the date of 1st of October is given, but remember, in the above point, it's already mentioned that on 30th of September, there is interest. So let us arrive at working note 3. How many debentures do we have? So basically, this is for interest on 30th September 2018. Okay. Totally, how many debentures do we have? 5,000 plus 2,500 debentures. 7,500 debentures. Face value 100. Interest 13.5%. What is the period? 6 months out of 12 months. That will be the interest. So calculate 7,500 into 100 into 13.5% into 6 by 2. 50,625 is the amount of interest income for 6 months. This has to be considered as interest income. Let us first say interest received. Okay. Earlier in the working note 1 and 2 interest, whatever we calculated, what was that interest? That was interest paid at the time of acquisition. This is interest received on these debentures. Alright. Now move to the next point. On 1st of October, company sold 2,000 debentures at 103. That's fine. Okay. Let's look at what the calculation. Now the next working note will be for the debentures sold on 1st of October. Working note for debentures sold. Okay. Right. How many debentures are sold? 2,000 debentures are sold. At what value are these sold? These are sold at 103. Will there be any interest? interest is 0. Why is interest 0? Interest is 0 because till yesterday, that is 30th of September, interest was already collected by us. So there is no further interest what we can charge any other party. Okay. So now based on this we need to calculate what is the amount what we have gotten. So we would have gotten 2,06,000 rupees. This is the money what we received, sale proceeds. Okay. Then sale proceeds. Okay. Now cost. Cost you need to calculate using the average cost principle. So by applying the average cost principle, just look at this. We have in the question 5,000 debentures we acquired at 5,19,375. We acquired 2,500 debentures at 2,45,000. So totally what do we have? We have 7,500 debentures at a cost of what? At a cost of 5,19,375 plus 2,45,000, which is 7,64,375. That's the situation. How many debentures are sold? 2,000 debentures are sold. So what is the cost of debentures sold? So 7,64,375 into 2,000 divided by 7,500, which is 2,03,833. Okay. So sometimes when you do calculations like this, your calculator may run out of digits because you are multiplying 2000 into 7,64,375. So it might run out of digits. So what you might have to do in such cases is, anyway you should do ultimately 2000 into 7,64,375 divided by 7,500, right? So then as well do 7,64,375 divided by 7,500 into 2000. So ultimately you will get the answer 2,03,833 is the cost. Okay, let us write this. 2,03,833. What is the profit? Now friends, by the way, without any confusion, what we applied here is average cost method. Okay, right. What is the profit here? 2,06,000 minus 2,03,833, 167,2. Okay. So 2,167 is the profit on sale of investment. Where will this 2,06,000 go? This will be credited to investment account. All right. Now, this profit of 2,167 will be written on the debit of investment account. Okay. So, this is the profit transferred to P&L. All right. That is about the sale of debentures on 1st of October 2018. Now, let's make the next working note regarding conversion of debentures into equity shares. Let's see what exactly has happened. So, here on 31st of December, the company received 10,000 equity shares of rupees 10 each in P Limited on conversion of 20% of its holdings. Working note 5. What is the number of debentures we have today? We have 7,500 debentures. Okay. Out of those, or rather, that is what we purchased. Out of those, we sold off 2,000 debentures. So, we are left with 5,500 debentures. Right. Now, 20% converted into equity shares, 80% continuing as debentures only. So 80% is 4,400 debentures, 20% is 1,100 debentures. Now, what does the question say? They are converted into 10,000 equity shares. 1100 debentures became 10,000 shares of rupees 10 each, of rupees 10 each. Okay, right. So that is one point given in the question. Now we need to arrive at the cost of these equity shares which came into existence on account of conversion of 1100 debentures. Now how do we do the calculation for that? Pretty simple. Initially when we purchased 5,000 debentures, the cost was 5,19,375. Then we purchased 2,500 debentures at a cost of 2,45,000. Then we sold off 2,000 debentures which had a cost of 2,03,833. Cost, I am talking only about the cost aspect, right. So considering this, what is the cost of 5,500 debentures? It will be 5,19,375 plus 2,45,000 minus 2,03,833, which makes it 5,60,542. So for 5,500, if it is 560,542 into 1100 divided by 5,500, which makes it 1,12,000. How much is that? 1,12,108. So 1,12,108 is the cost. What do you mean by cost? It is the cost of debentures which became equity shares. Okay. So for this much, or the shares what we got are worth 1,12,108. How many shares we got? We got 10,000 shares of rupees 10 each. Okay. So please write down, for rupees 1,12,108 worth, we received 10,000 equity shares of rupees 10 each. Okay, right. So this is one step. Now besides this, what else do we have in this question? Market values are given. Oh, interest is there. Yeah. So interest for 3 months on convertible debentures is also received. So let us calculate interest also, friends. So for these debentures, what is the interest? Interest for 3 months. September is over, October, November, December, 3 months interest. 1100 debentures into rupees 100 into 13.5% into 3 by 12. How much will that be? Let us check. That will be 1100 into 100 into 13.5% into 3 by 12, which will be 3712.5. Let me round it off to 3713. Okay. So let us round it off to 3713. So this is the interest received. So let me call it clearly. This is received. Okay. Right. Now go back to the question. What does the question say? Market value of debentures and equity shares at the close were 106 and 9 respectively. Prepare investment, debenture investment account and equity shares investment account. Okay. Now, one other point, friends, we need to bear in mind in this case is we have the interest accrued, not yet received, but interest accrued. So let us calculate. On 4,400, interest is accrued but not yet received. Okay. So 4,400 into 100 into 13.5% into 3 by 12, interest accrued not received. So how much will that come to? Maybe 3712.5 into 4, that's what it is going to be. It will be 14,850. That is going to be the interest accrued. Wonderful. So these are the workings what we need to do. With these workings, we can easily start preparing the investment accounts. Friends, let's get started. Debentures, investment in debentures, we require a ledger. Then we require ledger for investment in equity shares. So please open those ledger accounts. You know, for debenture, you need to have date, then you need to have particulars, then nominal value. Then you also need a column for interest and separately for amount, right? So 5 columns on each side. And when it comes to equity shares, you don't require interest column, you just require 4 columns on each side. So come on, first draw those ledgers, then we will start solving the problem. Now friends, the first one is investment in debentures, basically 13.5% debentures. Then we have another account for equity shares. Let's start putting details into these columns. Date, particulars, then face value, interest, then amount. Okay. All right. Now let's start with 1st May to bank. We have working note for it, working note 1. What is the amount, face value? 5 lakhs, right? 5,000. So 5 lakhs is the face value. Interest, we already calculated, 5625 is the interest. Then amount, 5,19,375. Clear? This is coming from our working note 1. Then on 1st August, again to bank, working note 2. This time we purchased 2,500 debentures. So this will be 2,50,000. Interest on this we calculated at 11,250 and 2,45,000 is the amount. Clear? Now on 30th of September there is an interest due date. So please write down 30th September by bank. What is the interest amount we got? 5625. That is the interest. Then on 1st of October there is a sale of debentures. 1st October by bank, 2,000 debentures got sold. 2 lakhs is the face value. Because interest was paid off till 30th of September, there is no interest on this transaction. It was sold at 2,06,000 and we also calculated a profit of 2,167. So 1st of October, I will write 2 P&L, basically profit. Okay. There is nothing in the interest column or face value column because you are just reflecting the profit portion here. Right. Then after this, there were equity shares which came into existence. When did this happen? This happened in the month of December. Do we have the date for it? Yes, that's at the end of December. So fine. Now 31st of December, by investment in equity shares. Investment in equity shares, how much portion went out? 1100, means 1 lakh 10,000 went out. At what value? We did that calculation. It is 1,12,108. Okay, 1,12,108. Right. So for this we have our working note. So everywhere we have our working note numbers, and also please give working note references. Okay. Right. Now, based on this, the next one is we received interest by bank. Interest is 3713. That is the interest what we received. There is also interest which is accrued but not yet due. So for that we will have by balance carried down. Interest balance is 14,850. Okay, interest balance that is carried down is 14,850. Okay, now we can wrap up the investment account. In investment account, what else do we have? I don't see anything else specifically. Interest, let us kind of close the interest column first. Face value I think is straightforward. Okay, if you want you can probably close face value first. Face value will be what? 7,40,000 minus 3,10,000. This will be 4,40,000. Balancing figure. So 4,40,000 is the balancing figure. Is 14,850 also balancing figure? No, 14,850 is not the balancing figure. It is coming from our working note. Okay, right. Then the amount column will have a balancing figure. Our interest column also will have balancing figure. Let us arrive at the interest balancing figure. 50,625 plus 3,713 plus 14,850 minus 5,625 minus 11,250. So on 31st of December, I will write to P&L in interest column 52,313 balancing figure. Now come to the amount column. 519,375 plus 2,45,000 plus 2,167 minus 2,06,000 minus 1,12,108. That is 4,48,434. This is balancing figure. So with this we can actually close the account. 7,50,000. Then 69,188. This is what 2, 4, 5, 6, 7. 7,66,542. Alright, that concludes investment in 13.5% debentures account. Now let's prepare investment in equity shares account. So we have date, particulars, face value, amount. Okay. Now on 31st of December, investment came in because investment in debentures came down and it got converted into equity shares. So 31st of December to investment in 13.5% debentures, face value 1 lakh, amount 1,12,108. Now, the question says that on 31st December, these shares are at 9 rupees. Okay, that's what is given. Now friends, if these are at 9 rupees, 9 into 10,000, amount will be 90,000. So that is the closing value of investments. I mean carrying cost or market value, whichever is lower. If you consider that, I am talking about cost or market value lower. Okay. If I apply this principle, cost is 1,12,100. Market value is 10,000 into 9, 90,000. Whichever is lower means I will consider the market value. So it will be by balance carried down 90,000. Okay. Now we actually got this at 1,12,108, but the carrying amount is 90,000. What does it mean? There is a write-off to the extent of 22,108. So please write down 31st December 18 by P&L write-off 22,108 balancing figure. Okay. So this is the amount which will be written off. That's it. Now close this account. 1,12,108. Cost or market value, whichever is lower. That principle we have applied. That's all.